bets on the pound dropping. And as the traders went against the government, there was a big battle. And on that day, the pound really moved from 2 to 1.4. That's a big drop. And George Soros made over 1 billion pounds, actually dollars. And the government lost in excess of $3.3 billion. This event actually caused, over the next kind of years, a problem for the Conservative Party in the UK, who was in power, and it actually led to the rise of Tony Blair as a opposition, and he won and became longest-serving Prime Minister in the UK. The next one, the 2008 crash of 2008. This is the one that many of us remember. The big crash of 2008, everyone remembers. Bear Stearns collapsed earlier in the year of 2008. Then Lehman Brothers in September collapsed. Again, this time of the year, October, September, October was the time that the collapse happened. There was a run on the banks in many countries. People queuing up, taking their money out of banks. They thought if Lehman Brothers, Bear Stearns, some of these big names are failing, and others fail.
To IPO and pre-IPO, which means that they can invest in most promising startups on the early stages and earn lots of money when it comes to public. A second thing for brokers, we have a special company, we deal with best partners and most trusted companies. First of all, the CFRA, which is the company that helps us with the analytics. We always rely on the analytical advices and reports of the best in the industry. The company's forecasts hit like around 85% accuracy, and this company belongs to Standard & Poor's Holdings, so it's the most trusted analytical partner in the world. This company helps us to select the best assets and give them to you guys. Of course, Clearstream and Euroclear are the ones in charge of all our securities operations. That means that we work with the best in the industry, and as I told you, we have a technical solution to connect your traders and investors with the IPO and pre-IPO market. And my friends from AMTS Solution Company over there, make some noise. Yeah, they help us with these questions, and they provide the best gateway to connect investors and the venture investments market. So moving forward. So the way we select the companies, because you need to be sure that you are investing in the
Nice. implementable. In the stock market, the same thing is implementable. So everyone can analyze themselves for making a proper track record by making a proper stop loss or take profit. If there is no option, at least you should have this proper exit and entry rules as well. So where I will enter in this trade, where I will exit in this trade, where I will make profit and how much I will make profit. So these are the basic things. I think so. I did not make you boring in this. So thank you.
Ladies and gentlemen, we're going to keep the program moving along. So next up from VT Markets, we have the Director of Business Development who's going to be talking about the tactics of global markets in 2022. So ladies and gentlemen, I'm going to hand the stage over to John Giorgio.
Hello ladies and gentlemen, my name is John Giorgio. I'm the Director of Business Development at VT Markets. Now my presentation is a brief summary into 2022 and what we can expect in the near future. Now, I apologize. Okay, so throughout 2022, now the market has been unstable due to the ongoing conflict between Russia and Ukraine, worsened by sanctions imposed by the United States and the European Union, which has slowed down the pandemic recovery worldwide. Now, the war has resulted into a major supply shock and drove up commodity prices. Inflation rates caused by recovery. The global economic situation appears to continue hampered by numerous uncertainties. Now, there are several risk factors that have the potential to impede global economic growth, including geopolitical tensions that have not been subsided, high inflation, thereby forcing the central banks to constantly raise interest rates and increasing the possibility of the economy entering a recession, and conditions in one of the world's largest economies, being China, which continues its zero COVID policy, which resulted in a slower than expected economic growth. A slowdown in one of the largest economies in the world will have enormous effects on the global picture. Now, the Federal Reserve has just raised interest rates by 75 base points, marking the fifth hike since March 2022. The Federal Reserve is still focused on reducing inflation, which requires a downturn in the labor market. After seeing the US economy continue to slow down, the Fed will pay closer attention to the data before deciding whether to increase interest rates in the near future. Now, looking at this, we can still predict that the Fed will raise interest rates, at least in one of its meetings in the final quarter, which the Fed recognizing the needs for a 100 to 125 basis points increase, while monitoring economy figures. We see the Federal Reserve needs time to re-establish price stability before deciding to finally slow down its operations. Before decreasing interest rates, the Fed stated that it must be certain that inflation has started to return to 2%. Meanwhile, Russia's invasion on Ukraine in late February 2022 has caused unprecedented instability on the global markets. Both traders and investors were compelled to deal with the financial repercussions. As the situation deteriorates into a lengthy armed conflict, assets prices fluctuate in response to significant occurrences. Unprecedented sanctions, logistical obstacles, and escalation cycles have all contributed to the periodic insecurity. In addition, geopolitical conflicts has had a significant impact on the world's commodity, currency, and stock markets. Even though the Russian-Ukrainian war was a regional conflict, its involvement affected commodity markets worldwide. The crude oil and, of course, the gas prices were amongst hardest hit. Now, looking onto the technical outlook for the fourth quarter. Now, the USD index. Okay, at the time of writing, which was actually late September last month, the USD index is at a level that has not been reached in the previous 20 years, having broken through the area of resistance, reaching a high level. In recent years, the global economy and inflationary conditions compelled the Fed to constantly raise interest rates, resulting to a USD strength. If we check the price, which is broken through the 200 moving average, we can see that there is a greater possibility for gold to keep falling. Now, moving on to Bitcoin. Now, Bitcoin is currently trading at $20,000 barrier. The price level at the present market is $20,000, which correlates to the movement over the past 2 months, which has a range-bound movement at a narrow level. If we check the monthly time frame, we can see that the market is currently stuck at its pre-pandemic high at $19,255, which is quite valued by the market during the period of uncertainty. Now, Bitcoin, which is
very hard job. You're committing your time, you're committing your life in a way, you're committing all the power that you have and your energy to really be successful over there. And as earlier said by the representative of Ahmad from TNFX, it's all about the mood. And really, if you go all in a way, or all out, and you really know how to really trade in or out, or when is the right time for you to really withdraw and to be a smart trader, then yep, you're in a good track. But if you are going all in and you just want to be greedy a little bit and really go in harsh and losing your money, and you're not worried about it, then that's your problem. But then that's why we listen to these conventions and speakers. We take from them and then we implement them ourselves, and then we see where we can really trade in and trade out, and where we can sell and not. For the meantime, we're gonna meet right now from Right FX, the Right Choice, Mr. Sandeep Singh, the head of sales, to talk a little bit about the introduction to Forex trading. So, Mr. Sandeep, let's go. Okay, you wanna jump?
Hi, good afternoon everyone. My name is Sandeep Singh and I'm representing here Right FX. So bear me if I do some mistake, it's my first time. So I heard a lot about what people are doing here. They are explaining you a lot about how you can trade in the market, how you can use stop loss, how you can use take profit. But I am here, I'm gonna keep it very simple. I had prepared a PPT called Introduction to Forex Trading. If you are fresher, then it will help you a lot, or maybe if you are not, then you will be familiar with these terms. Okay, so let's start with that. So what's Forex? So Forex market, as you know about it, it's a decentralized international market. So nobody can control it. Only the people, those who are trading it, they can manipulate, or they can make an impact on the market. So that's why we call it decentralized market. So there is not a single entity who can control this market. So that's why it's quite secure that you can trade in this market. And we call this Forex, FX, spot FX, or plainly sometimes we call it spot market. Okay, next. So let us go back to the history from where it started. Before World War II, there is no reserve currency. People used gold as reserve currency. So after when World War II finished, so all the allied countries, they sat together and they finalized that we need a proper currency system. We need a reserve currency because we cannot be dependent on gold. So what they finalized that they will use US dollar as the reserve currency. And the second most important thing they finalized is that they created two organizations. One is International Monetary Fund and other was International Bank for Reconstruction and Development. And later it was named as World Bank, as you all know what the World Bank is. Okay, so it's quite basic what I'm going to tell you, that this is how the currencies quotations are done. You will always see currencies or any other product you're going to trade in pairs, because whenever you are going to trade, let me give you a simple example. If you want to trade like a phone, if you want to buy a phone, so when you have to buy something, you have to sell something, right? If I want to buy a cell phone, then I have to pay him, or I have to sell him the dirhams or whatever currency I have to sell him, then I can buy that phone. That is called trade. That's how it works. That for every trading instrument, you will see that instrument in the pairing. Here, we are showing you Euro USD. So the price of Euro USD is reflecting here is 1.0676. So here, the Euro is the base currency and the USD is the core currency. Core currency is the currency in which all the calculations is done. All the profit and loss calculation is done on the base of core currency, and the base currency is the currency that you are actually trading on. If you place a buy trade on Euro USD, it means you are buying Euro and you are selling USD. But if you are taking a opposite trade, like you are selling Euro USD, it means you are betting a sell trade on Euro and you are betting that dollar will go strong and you are buying dollar. Okay, so here you can analyze that 1 euro is equal to 1.0676 USDs. Okay, the main important thing that Forex traders they provide you, that is leverage. So leverage is something like you borrow something from broker. You don't actually borrow something from broker, that you can trade on higher volume or a higher amount with investing less money. Like if we take an example of 1:400 leverage, by investing $250 with a margin of $250, if I am correct, then you can trade up to $10,000. But we have to take note of that, higher the leverage, higher the risk. So you have to keep your volume as low as you can to consider your profits and loss, to analyze that. BIP is the basic unit that we use for the calculations of profits and loss. In the major currencies is the 4th decimal point, that if we use the pip, 1 pip in 1 standard note is considered as $10. In the gold, it's second decimal point. But in some currencies like USD, JPY and something like that, the second decimal point is considered as the pip. But in the major currencies, if you see, the price will show in 5 decimal points. The 5th decimal point, we call it pippets. That is not usually considered for the calculations. Okay, that's quite simple. What is bid price and what is ask price? So when you see the platform now, you will see they will show you the bid price and the ask price. The bid price is the price where you can sell that product. Like if you see the bid price of gold, it means you can sell the gold from that very point, and if you see the ask price, you can buy the gold from that very point. And the difference between the bid price and the ask price is called spread. Okay, now we are on pending orders. I hope you know about what is buy limit, what is sell limit. So right now, let's take an example that right now the price of gold is 1633. I don't want to buy it right now. I think that it can come more down around 1600, and then I will place a buy trade. But maybe it can come today, maybe it can come tomorrow, maybe within 1 second. So what I will do, I cannot see the market 24/7. So what will I do? I will put a buy limit trade, buy limit pending order, and I will put the price of buy limit is at $1600 of gold. So whenever the price will come, even for 0.01 seconds, microseconds or milliseconds, my trade will automatically get hit and it will come live. Until then, the trade will be in the pendings. Next, same goes with the sell limit. So let me again take the example of gold, that right now the price of gold is 1633. I don't want to sell it right now. I want to sell it at a higher price like 1650 or 1680. So what I will do, I will place a pending order. I will place a pending order at the price of 1650, and whenever the price of the gold will come at 1650 or above that, my trade will go live. So it will come out from pending orders to the live orders. Now, this is the main thing, that is called buy stop and the sell stop, where the most of the clients get confused. So, buy stop and the sell stop are the two pending orders that are used when the breakout happens. What happens? Let me take an example that if I say that today the second support of gold is at 1650, and if it breaks that second support, it may go higher. So what I will do, I will not put a sell trade from that price. So what I will do, if I know that from breaking that point, it can go much higher, I will put a buy stop. It means if the price of gold is at 1633 right now, and if I think that if it crosses 1650, it can go up to 1700, what I will do, I will place a buy stop limit at 1655. So if it breaks 1650 and comes to 1655, my buy trade will automatically get opened. It will be live in the market. So I can make money out of it. And opposite to sell, buy stop, there is a trade pending order called sell stop. That again I will give the example of gold. That right now the price of gold is 1633, and that the market is saying that if it breaks 1600, then it can come down to 1550 or 1580. So what I will do, I will put a pending order of sell stop at 1600, that if it does that level, automatically my sell trade will get open. Usually these pending orders, sell stop and buy stop, are used to hedge the accounts. Okay, these are the basic calculations. How you can do the calculation using PIP. How you can do the calculations. How much margin is required. How you can do that. These are the basic calculations over there. Okay, now the most important part where people don't put their focus on over there. So the most important thing that is used in the used in the trading is called support and resistance. I don't know why people try to overcomplicate their trading by using this indicator or that indicator. What I have learned from all these years, that the support and resistance is the best indicator to use for the trading. Okay, so here you can see the support. Okay, so as you see that green line, support level is a level from which that instrument is struggling to come.